The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. Well, I'm back after a long sabbatical. I'm going to give you a little lecture here. Folks, don't take your health for granted. I've lived on this planet for 73 years, taking my health for granted. And believe me, this past 6 or 7 months have been a real eye-opener to me. So you young folks and people that are not into their 50s or 60s yet, you best start taking care of yourself, because as you get older, you don't bounce back from stuff as nearly as quickly as you think you would. So anyway, thank God I've got trading. Boy, that's been the thing that's kept me above water here these last few months, because I really love doing that, and it's really been exciting times, of course. Now we're going to take a look here at the Bradley, because it's been it's really funny, because the Dow Jones is almost exactly where it was on December 31st when the Bradley was supposed to have topped, and of course the other indices have gone higher. The S&P has gone up and made a 1.27 expansion, as has the Nasdaq. But of course the Nasdaq has backed off a great deal from its level. But we'll wait and see. We have a bifurcated market here, because we have the Dow, much weaker than the rest of the stocks for the first time in a long time. Today's rally high, as a matter of fact, was exactly 382 of the high we made last week before the 300-point break. So if we don't get much above 16,530 today, that's only 15 points from where we are now. This could be an inner point high here, because we've had such a really good support level coming in Thursday. We had a perfect 786 retracement on the daily Dow and the S&P and the Nasdaq, which hit the 618, and then we've had a really good rally, because last night and over late Friday we had 3 higher bottoms. And so the rally today is certainly not expected. The question is how much higher we go from this level. Now what I'd like to do is to go to the next chart that I want to focus on, and that is the New York Stock Exchange Index, because I'm watching it very closely for the possibility of an island reversal pattern, because we have made an island reversal top so far. And I'll put this into Tiger TV so you folks can take a look at it. And as long as we don't get above 10,650, that's the low that we made a week ago last Thursday, before we had the big downdraft, and the low that we had coming in on on Thursday. That Thursday low that we had was an exact 61% retracement of the low that we made from April 28th, and then it was also a 382 of the low that we made from April the 14th. So there's been a 14-day cycle in there that's related to the full moon and the new moon, because we topped on the day of the day after the full moon, and then we came down really strongly. And this rally is the snapback rally that we're looking at. So 10,650 in the New York Stock Exchange is what we're watching, and then in the the Dow Jones, I'm watching 16,005. Let me make sure I get that right price. I believe it's 16,525 was the high today, and that was the exact 382 of the number that we were watching. If you have any questions, it's 877-927-6648, and I'll be happy to answer any questions. We have had several emails about the Bradley model, and the $64 question here, folks, is that the Bradley is far from perfect. It's been the best thing that I've seen over my 50-some years, but it's far from perfect. We've had a situation, where the market keeps going higher, but it backs off right away. And these patterns are incredible, because, once they make a top and they make a 1.27 expansion, it's a very easy sell, and then you buy the retracement. I mean, there's not been a crazy market. It's been very, very orderly. We've had some tremendous breaks in some of the markets. For instance, I don't trade the utilities ever, but we've had a really disastrous break in the utilities here. I want to bring this to your attention because I know you folks don't look at it very much, but it's part of the Dow theory, and this has been a huge break that we've had so far in the Dow Jones utilities, and we're coming into the first support. We're down quite a bit today, but that's only part of the Dow theory. We also have the Dow Transportations, and they're making a double top after having a really severe break. So we're starting to see increased volatility, but that's not showing up in the VIX index. And I believe really strongly that this margin debt that we have outstanding, which keeps increasing, by the way, is going to be rectified in a very bad way. And since the market has not had any serious correction since February, my assumption is that when it happens, it's going to be very, very vicious, and it's not going to take any prisoners. I mean, it never has in the past. I don't see why it would be any different this time. That would be my guess of what I'm looking at in looking at the overall technical picture of the market. But frankly, it still has a bullish bias because we've had higher bottoms all across this the last several weeks. Even though we've had weakness in the Dow Jones utilities and also in the Dow Jones, they've held at major support levels. And so that tells us that we're still in a bullish phase of the market, and there's not really any reason to be panicked if you're on the long side of this, because it's been very easy because the bottoms have been higher and the tops have been higher, so you're still pretty much in a trend to the upside. So that's pretty much it. We got a call from Brent in Martinez, California. Brent, are you there?
I am, Larry. I just wanted to welcome you back, and we've definitely missed you very much.
Well, thank you. I miss you guys too. But boy, I'll tell you, it's been a real tassel. As a matter of fact, today I was very, very nervous coming on the air, and believe me, for me to be nervous speaking in front of people is very, very rare. But it was a rather interesting thing this morning. My wife was making fun of me because she says, "What are you talking about?" She says, "You never have any trouble talking." And I said, "Yeah, well, today I feel like." What can I do for you, my friend?
I was calling today about gold. It seems like we're kind of stuck in a range here, and I just was wondering what the number is as far as a breakout to the upside or the opposite to the downside, where you would either be a buyer, on the put side or on the long side.
Well, today we made a 786 retracement up at that 1305 level, and that was our fifth lower high that we've had going back, into April. And so that tells us that we still have a bias to the downside. The area that I'm looking at for a potential buy in gold is down around the 1255 level if we get there. Now, there should be some pretty strong support also around the 1285 level, but the first level for support is around 1287. The second one's around 1255. However, if we can get above 1310, that would change the whole picture, because that would mean that we would be ready to assault the 1345 to 1350 level per ounce in gold. But that's going to take some time because of the fact that we've had these lower tops in the market. Every time it gets up to a 786 retracement, it gets hammered back very quickly. And silver is acting so badly, Brent, compared to gold. I mean, silver looks like it's as sick as a dog.
No, I agree. My tendency is to want to just wait until we get to lower price and then buy. I'm just trying to be patient and not jump into the thing at this point.
I agree with you 100%. I think patience is the best thing to do and wait for gold, because we still have a possibility of silver getting below $18 per ounce, which I think would bring in a long-term 618 retracement going back from that old high in April of 2012 when we hit $49 an ounce. That would be a 61% retracement of the whole move, and that number in gold would also be down around the 1170 there. But I don't think gold is going to get back to the 1170. I think it's going to hold the 1250 level if we get that far to the downside. But we're living in an era where we could be looking at deflation out here, because the grains have been sold off quite a bit here these last few weeks. And the crude oil is making a 61% retracement today, so we're still have a potential for deflation. I know the Fed doesn't want that, but that doesn't necessarily mean they're going to get it. So we'll have to watch that closely.
Well, I really appreciate your help, Larry. Again, it's we're all very lucky out here in the audience to have someone with your knowledge. So.
Well, I'll send you the $20 as soon as I get a stamp for the envelope, okay? Okay, Brent.
Take care, Larry. I'll talk to you soon.
Yeah, may God bless. Thank you for calling in. Okay, that's basically what I'm going to do here is I think we should take a look here at the gold on a daily basis just to see where we are, because we've been at this level, this 50% level for so many times here over the past few weeks, and you'll see that if we get much lower here, we're going to be looking at a much lower price in gold, and this is where we're looking at this 1255, 1260 area if we get down to that level. But the lower highs here are the real key here. We've had higher bottoms, of course, since April, but we're also having lower tops. And since the top that we made way back in March is so much higher than where we are now, that tells us we're still in a strong downtrend, and selling the rallies has been, the thing to do. So we'll see whether that's going to be a case here. Okay, we got a call from Victor in New Jersey. Victor, are you there?
Yeah, how you doing? Remember last time you were speaking about ABX hitting a low, cycle low at 1734? Well, it's way below that now. Where do you think it's going?
Well, I don't remember the last time I was on the show, but I remember how important
right before you went off. It was like in April 1st or something. You thought it did hit a bottom, went up like 30, 40 cents. Now it's completely below what you said.
I remember, the only thing I remember vividly about that was the fact that it had to hold that level because it was such an important.
Now what do you think?
Let me pull it up. This will be the first time I've seen it in quite a long time. So, wow.
What have you been doing?
This is exactly right. Yeah, you'll be able to see it because I still have it in here. We were looking at it at 1782. We had a pretty good rally, and then once we went below that signaled, it was holding. Just give me 1 second here, Victor, and I'll pull this up so everybody can take a look at it. But it's right at the 78. It's at the 786 retracement of the low from last December right now. It's got to hold this level that we're in right now at 1636. But frankly, I would wait a day or two, because of the fact that we've had 1, 2, 3, 4 hard down days, and you want to make sure that the bottom is finally here. But we're right at a 786 retracement on this. Right now, yeah, right now is right where we're trading right now. It's trading. Let me double check the figure here, and I'll put it in.
You got a lot of volume here, or no?
I don't really watch the volume. Actually, we're a tiny bit below. We're about 15. Well, actually, we're 20 cents below the 786, which is another reason to wait a little bit. So I would.
Where else can we go then? Where's the next level?
Well, the next level is going to go down and test 1512, which would be another, another potential for a double bottom. But that's my guess. See, the key here is that when we had those triangles that we had in February. Oh, we got to take a break. Victor, stay with us, please. You come back and we'll talk about this.
Talk about it. Thanks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back. I believe, Victor, are you still there? Victor, are you still there? Evidently, we've lost Victor, but I wanted to go through the ABX again because there is a really good ABCD pattern forming in ABX down around the 1554 level, which is the same level that we had last December. So that's my guess, is that we are probably going to get to that level in ABX. Folks, when you see these triangles like we have on the ABX here, if you go back and look at September and October, November, December, when these triangles come down where they're perfect in time, just like we had during the February-March period and March to April, and they have the good rally, it rallied back 50% of the high that we made in March. Once they break those lows, that's basically telling you that the cycle that was there is no longer valid, and that's why it's so key to to watch these points as far as to look at where the trend is, because when you have higher tops and higher bottoms, you're of course in an uptrend, and when you have lower tops and lower bottoms, then you're in a downtrend. That's what we have in gold right now. We have a downtrend because we've had lower tops, for the past several months. Every time we've rallied up to either a 618 or a 786, the market has been hammered to the downside, which leads to you to believe that your bias is to the downside. Where in stocks, we've had higher bottoms here since February. I mean, the Dow Jones Industrials and the New York Stock Exchange Index they have not backed off at all. I think this is one of the longest periods where we've gone, without a correction. We haven't had a 3-week correction in the Dow in 5 months. That in itself makes it an outlier event, because most of the time the market is, jumping around between support and resistance points, but this one just keeps going higher. It will finally turn around someday, hopefully in my lifetime, which is questionable at best. So we will find out whether that's going to remain to be seen. So we know pretty much what to look for in the gold market. The next market that I wanted to share with you is the bond market, because I think that is at a really critical level here. We've had a very strong move here over the past few months, and we were waiting for that area to come in around the 138 level, and we've certainly achieved that. We've had the 138 level actually is a 382 retracement from the high we made back at 152 about 2 years ago when we were making the huge butterfly top in the Treasury bonds, and now we've started what I believe is a pretty severe correction. It should be at least 5 points, which is around $5,000. That's the one that we had in February and March. Came down exactly to 61% retracement there at the 130 level. Then we had higher bottoms all the way up until what we had occur on last Friday when we jabbed up to that 138 level at that point. The TLT, which is the reciprocal of this for the bonds, I want to bring that in to let you folks see it, because it is one that is very heavily traded, and I wanted to hold on one second so I can get this to pop up. I should be okay here. Yeah, there we go. We'll be able to see it pretty easily here also, that we were making almost a 61% retracement from the high last April, but it's still 382 of the one from that we made way back. Oh my gosh, that was back about 2 years ago, as I recall. So the TLT completed the ABCD up here at the 114 level, and your first profit objective on this would be around the 108, 109 level in the TLT, because it is a perfect ABCD, and it is certainly in a downtrend longer term, and we do have a 3 drive to a top pattern occurring on the shorter term dailies on this also. So that's another reason why I'm believing that we are looking at some higher interest rates, coming down the pike here, as opposed to lower interest rates. That's the bottom line of what I'm looking at right here. But remember, these markets, they jump around quite a bit, so you've got to be able to to take your losses when you see something is wrong, and the market will give you a second chance. There's no question about it. I mean, these patterns, I look at them every day, and it actually amazes me how incredibly accurate they are. And of course they fail, but even when they fail, they're telling you something. So it's a real joy to be able to do this and see the markets bounce around these numbers that we look at. But I think we've topped in the bond market because of that 138 level. If you recall, I think the last time I was on, we were talking about that. Okay, we got the Dow up about 22, the NASDAQ up about 30, the S&P up about 6. We'll be back after this message.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and one of the charts that I posted into the room today is the chart for the IWM, which is the Russell. And we did have a 10% correction in the Russell. We came down and we matched the low that we made on February 3rd and 4th, which was a huge date, astrological, and from a Bradley standpoint. And I believe anytime we take those lows out, going to be looking at serious, problems to the downside. The question that someone posed to me during the break here from one of the folks in the Tiger Den here at TFNN was, can we have rising rates with deflation at the same time? I frankly don't know how to answer that because I'm basically a technician. I don't follow the fundamentals of why these things do what they do. I just try to let the charts, tell me what they're doing. But I can tell you this, back in 1980 when I was at Drexel, we had interest rates at 13%. We had inflation pretty much 13%. And we were in the midst of a major recession that didn't end until August the 9th when we had the 5-planet conjunction occur, and interest rates shortly thereafter reached a peak that they've never seen since that time. They've been in a bull market for well over 32 years until they topped about 18 months ago. So there's a possibility that, every time it's a little bit different. They always say it's different this time, but it's usually it's exactly the same, but just a little bit different. I know that doesn't sound very much help, but it's the best analogy I can get. The markets go up and down because of fear and greed, and whenever those points are reached and things start to move the other way, then there's wherein lies the the turn in the market. That's all I basically can tell you, folks. I'm wrong a lot in these markets, but the thing is, I don't stay wrong. There's a big difference from being wrong and staying wrong. Roy Longstreet, in his book, that he I can't remember the name of it right offhand, but he says there's no disgrace in being wrong. The disgrace is in staying wrong. And that goes on to the same thing that we have here at Tom O'Brien for our Bloomberg. It says what the Buddha says. The Buddha says is to conquer. If you conquer yourself, you're omnipotent. To conquer others is really insignificant. So you must work on conquering yourself. And there is the biggest challenge of all, because that is the greatest cycle that we deal with, is that 8-inch cycle. But actually a 9-inch cycle between your left ear and your right ear. If you can conquer that cycle, then you've really, you've got something that you can put your hat on or take your hat off, and it'll give you an idea of what we're looking at. We're going to have hopefully I'm going to be able to do the shows all this week, and we'll do a commodity show this Thursday. We'll try to have Rich Anderson on. I don't think I've done a commodity show in almost 2 months here. Because of health reasons, but we've had some really strong moves in cattle and hogs, and we've had some pretty good moves down in the grains recently. So we've got a lot of things happening. I know if you folks are beef eaters, I've been saying this for months, that the size of your portions that you're going to have in the restaurants is going to be an ounce or two different than what you expect, because this is how they shave the prices. In other words, they're going to sell a 10-ounce fillet. You're only going to get 8 or 9 ounces, so that they can make up the difference in the cost. They started doing that back in 1980 when cattle got as high. If you believe this, they were picketing when it was 85 cents a pound, and now we're at $1.40 a pound, and you can't find a housewife in sight. So this is what we're looking at when we're watching these things with the commodities. But you just have to trade the patterns. That's the bottom line. I mean, time is the most elusive of all the things that I've seen. I've relied a lot of my stuff on astrology. It works, probably 70% of the time, but the other 30% of the time I have no idea, why it's not working. But it's just not. It's just not important, because if you have to manage your risk. If you can do that, then you're going to stay alive and have a lot of fun and doing it. That's pretty much the same thing. And someone just made the comment that they did the same thing with lumber when they started shaving the inches off the lumber. So a 2x4 ended up being a 2x3 1/4 and stuff like that. So it's really it's amazing how they do this. You'll see it in the packaging in the supermarkets all the time. Instead of getting a pound of bacon, they give you a package with 9 ounces, and it'll be the same price as the pound, but you're getting a third less, of course. But that's part of what we have with this. The problem with the meat market is that it takes 14 months, to build up a cattle herd because of the gestation period of the cows, and so that's the difficulty of that. We'll save that for. No inflation. Anybody that thinks there's no inflation should go to the supermarket sometime or move around. I'll tell you, folks, I've been doing a little bit of traveling since my surgery, because we came back to see my grandson today for his 3rd birthday, and believe me, he is about as excited as any 3-year-old that you could possibly imagine. He came running up to me today and said he needed $4, and I said, sure. And so I gave him $4, and I said, what's it for? And he said, oh, for cab fare. He's going to his nursery school today, and they're going to have a big party for him in the afternoon. But that's the real joy of getting old, is you get these beautiful grandkids that you get to see and play with, which is fun. Okay, back to the markets. Speaking of inflation, we have it all across the board, but it's not showing up in the cost of living index, because they change it so much. They'll take things out of it, like they take out food and they take out energy, and my gosh, what else is there? It's amazing. Now, crude oil, we should get to that, because we've completed a perfect 61% retracement here. Hold on if you'll give me a second, and I will get the crude oil chart up here because we went short some crude today, and I want to put this in here. We got up to the, give me 1 second to get the daily in, and then we'll be ready to go. Yeah, there we go. We're right in there now, and if you'll give me 1 second, I'll get this ready. Thanks for making it easy for me today, guys. As you can see, we've had, big butterfly pattern occurred, way back in the time frame of August, and then since that time we've had three lower highs. Today's the third one at this 103 level. Now, whether this 103 level holds or not, we'll have to wait and see, because there's a possibility if we break above this, we could get all the way up to the 107 level without any trouble at all, because it's still, you've had higher bottoms here, since January, and on the pullback that we just had in April, we had a perfect 786 at the $99 per barrel level, and we've had a really nice $4 move off of that up to this 103 level, which is the 61% retracement. The whether we reach much higher levels or not determines how quickly we can get above the 103.50. But at this particular level, if we get above 103.50, I would consider this a failed trade, and then we would be looking at a possibility of the move up to the 107. That's what the way I would be watching that, on a shorter term basis. So that's the main thing. I think the most important thing today is the fact that the Dow Jones Industrial Average only hit the 382 retracement. I posted that. Let me do it again. I'll do it with the Dow Jones Futures so we can see it a little better here. I've got to do an hourly chart here so we're able to see it. But it did a perfect Gartley here at the 382 retracement. And I think that's a very important, let me draw this Gartley in here, because I'm not sure that everybody can see it unless I get it. There we go. There it is. And let me get it into the room now. It'll only take me a second to do this, hopefully. And you can see that's the level that we hit today, was an exact 382 up at that. Actually, the number in the Dow Jones Industrial Average hit it exactly at 16,525. That was the exact number that we hit on the Dow Jones. So whether that's going to be the high or not, I don't know. All I know is that if we go below the low we made last Thursday, you can kiss this market goodbye, because we made a low on Thursday, and that means we had a 3-day rally that went to a 382 retracement, and that would be extremely bearish. Now the Nasdaq, on the other hand, has been much more bullish, because we made the 786 retracement in the Nasdaq, and I'll show you that in just a second here. As soon as there it is right here. If you'll give me 1 second, and I'll pull it up and we'll take a look at this, because we've hit this level several times now on the 61% retracement in the Nasdaq, and as long as we stay below the 1630 level, 3630 level in the Nasdaq, we've had lower tops now. We had a lower one in March. We had another one on lower top on March 24th. We had another one on April that was a lower top. We had a matching top last week at exactly the 61% retracement, and we tested that again today. So we're just in lower top range here. And when you stop and think that what we've done in the New York Stock Exchange Index and some of the others, the Nasdaq is lagging the market quite a bit. The IBB has been that's the market for the biotech fund. That was the one that was the strongest of the whole bunch during this big run up here. Has been under a great deal of pressure. We're having a little bit of relief rally today, but not very much. And you'll see that it has the same type of formation that we have in the Nasdaq, but it's even far weaker than we have in the Nasdaq. The low we made back in April was a 786 retracement of that move, and that was able to tell us that this market is still in an uptick, and that's really what you're looking at that point. Someone made the comment, is the Nasdaq making a head and shoulders pattern? And in fact, we did do that on last week ago Thursday, when we made that intermediate high up there, and then we had a substantial break, and then today we went back to look at that same level. Now, as when the NASDAQ was doing the rallying, you see the Dow Jones, which isn't the market, of course, it's only 30 stocks, is only making a 382 retracement. But at the same time, we're doing the same thing in the New York Stock Exchange Index. All we did today in the NYSE was to take out the previous day's high by just a very little bit, and we never even came close to that number that we were looking at, which is 10,650. So there's another reason to tell us that the market is still in a bullish phase, but it's showing signs of some cracks in the armor. It's not an overall advance like we've had through this whole era here. The hold up or the rally in the NASDAQ today is in reminiscence of what we did way back in February, where we came down really hard, which was our last correction, and then we made that same bottom back in April. We took that out on April 14th. It was a beautiful ABCD pattern in the NASDAQ that we completed down at that level about 3,400, and from that level we've had a pretty good rally, and we still could make another new high in the NASDAQ. It's still acting quite strong. It held higher bottoms all during April. Since April the 7th, we've had a higher bottom. We had a higher bottom on the 24th. We had another higher bottom on the 28th. And then in May, we had two higher bottoms, and we had another higher bottom on Thursday and again on Friday. And so this is telling us that the market, still has held major support, so you can't be, too aggressively bearish on it, looking at that at that particular time. So I hope this stuff is giving you an idea of where I'm coming from as far as looking at the patterns and everything. I don't think you can call this a really bear market until we take out the lows of April the 28th. That's down around 3480. That's 130 points lower in the NASDAQ. It's not that much lower in the S&P. That would be around 1855 in the S&P, which is about 24 points from where it is. But that's pretty much what I would be looking at if we were, looking at a place to say, hey, maybe the party's over at this spot. So we'll see whether that's going to be the case today. Now, the S&P did make a fib retracement today up around that 1882 level. We come off about 3 points, which isn't very much, but at least it's following the mathematics of the market pretty well, as from what we can see. That market is still, relatively strong. We've got the Dow is only down 8 points. The composite's up a little bit, so it's still holding relatively strong levels. But there's certain signs that tell us that maybe they're getting ready to have a move down that might last several weeks or even several months, which we have not had that in a very, very long time in the market, which in itself makes it an outlier event. That's the way it looks like from my point. So right now, we are looking at a market. We've got the Dow down a little bit, the S&P, of course, about unchanged, up slightly, and we have the NASDAQ being the strongest of the group, still near the highs of the day, and that's what we're watching. Gold is still up on the day, but it's given back most of its gain. It's well off, $10 off its high. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, I'm going to end the show here today with a silver and gold chart showing the 60-minute chart of silver. And then also in blue will be the 60-minute chart in gold. And what I wanted to show you, highlight something that I know that folks that trade very actively watch closely, is that when I've circled these new highs, when a market makes a new high and doesn't go anywhere, in other words, there's no thrust above that point, you should pay really close attention to that, both on the upside and the downside, because it's telling you that there were no buyers there at that particular time. So if you're watching for a place to go short, that's an ideal place to do it, because even though you might be wrong part of the time, the fact that at that particular point when the market made a new high, there was no sympathetic buying coming in. In other words, there were no buy stops there to trigger a rally of any magnitude at all. So that tells you that you're really not really facing much danger at that particular point. You must always use a stop, but that's pretty much what you want to do. When I traded on the floor of the CME back in the 80s, between 82 and 85, 82 and 84, those 3 years, one of the things I would watch for was to see how the runners came into the pit. And if the runners were not coming into the pit as the market was making a new high or new low, it told you that there was virtually no volume at that point, and so there was no selling coming in on the lows, there was no buying coming in on the highs. So it gave a very good indication that the risk at that point was relatively small. There could always be that case where a big order could come in very quickly, and then you were wrong, but that happens to all of us. That's why the stop protection is present, and that's why you use pattern recognition, because when the patterns fail, you must stand aside, because the next pattern high or low that you're looking at can be substantially from where you are at this particular point in time. So that's basically what you're looking at when you're doing this, is you have to put the odds in your favor, and the way you do that is you get the price that you're looking for and then watch how the market acts around that price. This is what we were watching today in the New York Stock Exchange Index because of that potential of the island reversal top. That number is 10,650. That is the low price that we made before we made the high, and then we gapped down that Thursday, and that means that everybody that bought the stock bought stocks over the last Thursday, over the last several days, that now have a loss, with the exception of those that bought late Friday or today, and we're still looking at that potential for a island reversal. But if we get above 10,650 in the New York Stock Exchange Index, that would tell us that we're most probably getting ready to head down. But right now the Dow Jones has only made a 382 retracement perfectly. It did it in ABCD format, which means that's a Gartley. That has a potential for tremendous bearishness. If we go below the lows we made last Thursday, that would mean the Dow would be looking at another 300 points down, and probably very, very quickly. So keep an eye on that low that we made on Thursday in the Dow Jones, because it's a very important spot from a technical perspective, because of the fact that we're only able to rally 382 thus far. It's still early in the day with 3 hours to go, but that's what we want to keep in mind. The gold, I still think we got a chance for lower prices in gold, also in silver. I believe silver can still get below $18 an ounce. Treasury bonds, we mentioned that we think we've made a major high in Treasury bonds up here at this 138 level. We completed a big ABCD level, and that corresponds with the TLT and then also the TBT on the reverse side of that, telling you the same thing, that we should have reached a high in bonds, which means higher interest rates should be coming. Whether they'll be very abrupt or not, we'll have to see. So live every day in an attitude of gratitude, and may God bless you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.